See, in initial measurement of the financial instruments, initial measurement, if financial asset are market terms, fair value is equal to transaction price. If if financial asset are at off market terms, determine fair value. Fair value will be fair value will be present value of contractual cash inflow discounted by using market rate discounted by using discounted by using market rates of interest. Treatment of difference between transaction price and fair value. If compensated by the recipient of origination fee, fair value is equal to transaction price less origination fee. If not compensated by origination fee, extra payment provide future economic benefit. Extra payment do not provide future economic benefit. Extra payment provide future economic benefit, recognize as assets prepayment and apply respect to IND AS. Extra payment do not provide future economic benefit, recognize as an expense immediately in profit and loss account. Summary for summary for initial recognition and measurements of the financial assets. Investment in equity shares. Investment in equity shares, subsidiary joint ventures, associates. Scoped out from this chapter, subsidiaries, joint ventures, and associates. Scoped out from the IND AS, scoped out from this chapter. This chapter means what? IND AS 109 financial instrument. And for this where you need to refer IND AS 27. Okay. Next. Investments in debentures and other securities. Investment in debentures held for trading, then fair value through profit and loss account. Not held for trading, hold to collect contractual cash flow till the maturity. AC applying EIR, effective interest rate. The accounting treatment is applying effective interest rate. Interest income applying effective interest rate. In case not held for trading, hold to collect and sell. In such case, fair value through other comprehensive income. With regards to recycling, interest income by applying effective interest rate. Concessional loan. Concessional loan gives concessional loan given are securing the deposit. Transaction price minus fair value of the loan, present value of the contractual cash inflow discounted at market rate of interest. Then treated as expense, profit and loss account, or prepayment of asset. This will be the treatment for the investment in debentures and other securities. Now, modification in cash flow. Dear friends, now we are going to see the summary of the for initial recognition and measurement of the financial assets. Investments in equity shares, investment in equity shares, subsidiary, joint ventures, and associates are removed from this chapter, and you can refer the IND AS 27. Okay. Now, for example, concessional loan given or security deposit, transaction price, less fair value of the loan, present value of the contractual cash inflow, discounted at market rate of interest. Then this will be treated as expense in profit and loss account or prepayment as an asset. Okay. Okay. Next. Modification in cash flow. If there is a change in the timing amount of, if there is a change in the timing or amount of estimated future cash flows other than due to impairment, the carrying amount of the financial asset will be recomputed at present value of remaining contractual cash inflow discounted by using original EIR, effective interest rate, and any difference due to such modification, any difference due to such modification will be adjusted to expense or asset account as the case may be. Concessional loan to subsidiary company, transaction price minus less the fair value of loan, present value of the contractual cash inflow discounted at market rate of interest, investment in equity instrument of subsidiary company. So what is accounting treatment? Accounting treatment is for the parent company, loan receivable account debit to investment of effective interest rate of the subsidiary company, debtor to bank. In case of subsidiary company, bank account debtor to loan payable account to capital contribution as other equity. Now, concessional loan to parent company. Transaction price less the fair value of the loan, present value of the contractual cash inflow, discounted at market rate of interest is equal to deemed dividend. Deemed dividend. What is the accounting treatment? Subsidiary company, loan receivable accounts debit, dividend or retained earnings account debit to bank account. Okay, friends. Okay, friends. Now, whereas in the books of the parent company, what is the accounting treatment? Bank account debit to loan payable to dividend income charged to profit and loss account. This is the entry in the parent company. Now, demand deposit. Fair value of demand deposit would be the amount payable on demand in books of account. The party making the deposit holder financial asset as well as in books of entity accepting the deposit. a bearer financial liability. Note, there is no need to apply amortized cost method. Trade receivables, it is initially recognized at a transaction price as per IND AS 115 revenue recognition, and amortized cost method will not be applied on such amount. However, if transaction involve a significant financial component, then amortized cost method will be the applied. Okay, understood, friend? What I mean to say here. Trade receivables. It is initially recognized at what transaction price as per India's 115, and amortized cost method will not be applied on such amount. However, if transaction involves significant financial component, then amortized cost method will be applied. Amortized cost method will be applied. Determining amortized cost for financial asset carrying floating rate of interest. What happened? The amortized cost for financial asset carrying floating rate of interest. For floating rate financial instrument, periodic re-estimation, periodic re-estimation of cash flows to reflect movements in market rates of interest, alter the effective interest rate to calculate the effective interest in each relevant period. The effective interest rate is applied to the amortized cost at the asset or liability at the previous reporting date. However, if the floating rate, however, if the floating rate financial asset or financial liability is initially recognized at an amount equal to the principal receivable or payable on maturity, then this periodic re-estimation does not have a significant effect on the carrying amount and the asset or liability. In such a case, interest income or expense is recognized based on the current market rate. Understood, friends? Not understood? Can I tell you again? Can I tell you again? Can I tell you again? Listen. However, if the floating rate of the financial asset or financial liability is initially recognized at an amount equal to the principal recoverable or receivable or payable on maturity, then periodic re-estimation doesn't have a significant effect on the carrying amount of the asset or liability. In such a case, interest income or expense is recognized based on the current market rate. Based on the what rate? Current market rate you will recognize. Okay, friends. Next, we are talking about another concept. Okay, friends. Understood, friends. Now, we are talking about regular way purchase or sale of the financial asset. How? Regular way sale or purchase of the financial asset. IND AS 109 defines a regular way of purchase or sale as a purchase or sale of the financial asset under a contract whose terms require delivery of the asset within the time frame established generally by revaluation, by regulation, or convention in the marketplace concern such a financial asset. Such a financial asset will be recognized at early either trade or date or settlement date on initial recognition. Okay, friends. Regular way purchase or sale of the financial asset, trade date accounting, settlement date accounting are different. Trade date of accounting. The trade date is equal date that an entity commit itself to purchase or sell an asset. IND AS 109 I'm talking. What I'm talking here, the regular way of the purchase or sale of the financial asset. Then what we need to do in the accounting? IND AS 109 defines a regular way of purchase or sale, a purchase of sale of the financial asset under a contract whose terms require delivery of the asset within the time frame established generally by regulation or convention in the marketplace concerned, and such a financial asset will be recognized at either the trade date or settlement date or initial recognition. Okay, friends. Now, regular way of the purchase or sale of the financial asset. See, AS 109 defines a regular way of purchase or sale as a purchase or sale of the financial asset under a contract whose terms require delivery of the asset within the time frame. Time frame. Friends, what I'm talking here, as per IND AS 109 defines regular way of purchase or sale, a purchase or sale of the financial asset under a contract whose terms are delivery of the asset within the time frame established generally by regulation or convention in the marketplace concerned. Such a financial asset will be recognized at either trade date or settlement date on initial recognition. Okay, now regular way of the purchase or sale of the financial asset, trade date accounting. Trade date is equal the date that an entity commit itself to purchase or sell an asset. Settlement date of accounting, settlement date is equal to date that an asset is delivered to or by an entity. Well, when settlement date accounting is applied, a buyer of the financial asset account for any change in the fair value of the asset to be received during the preceding between the trade date and the settlement date in the same way as it is account for the acquired asset. In other words, financial asset measured at amortized cost, change in value is not recognized. Financial asset measured at amortized cost, change in value is not recognized. Okay, financial asset measured at the fair value through profit and loss account, change in value is recognized in the profit and loss account. Financial asset measured at FE, fair value through other comprehensive income, change in fair value is recognized in the other comprehensive income. Corresponding, the seller of the financial asset de-recognize the same at the settlement date and does not recognize any fair value changes between the trade date and settlement date. Okay, friends. Now, fourth point is reclassification of the financial asset. I would like to talk on this topic with 2 minutes break. In between this video, I'll share to my colleague.
గురి పెట్టునురా తమ శక్తి పెట్టుబడిని. రాదురా ఏ విజయం నీ కోసం నా కోసం, ఎటుపోదురా నువ్వు చేస్తాం ఎప్పటికైనా సొంతం. ఎంత చేసినా ఎదగలేదని దిగులు చెందబోకు, ఆ లోపమేడుందో మనసు దీపాన్ని పెట్టి నువ్వు వెతుకు. అతుకులమయమని ఎక్కిరించకు బతుకు పుస్తకాన్ని, అది చితిలో కూడా బోధించునురా ఏదో అర్థాన్ని. రాదురా ఏ విజయం నీ కోసం నా కోసం, ఎటుపోదురా నువ్వు చేసిన కష్టం ఎప్పటికైనా సొంతం. పడిపోయిన చోటి పైకెదగడ మెట్లను పదును పెట్టు మొదలు, 10 మందిలోన నీ ప్రతిభను చూపగ పట్టుదలతో కదులు. ఏను పట్టి నడిపించునురా ఎదురైన అనుభవాలు, వేల ఏండ్లు వర్ధిల్లునురా నీ విజయ జ్ఞాపకాలు. రాదురా ఏ విజయం నీ కోసం నా కోసం, ఎటుపోదురా నువ్వు చేసిన కష్టం ఎప్పటికైనా సొంతం. కాలంతో పయనించే వాడికి కానిది ఏముంది, సాధనతోనే సాధ్యమవ్వునని సదాశయంతో సాగర ముందుకు. రాదురా ఏ విజయం నీ కోసం నా కోసం, ఎటుపోదురా నువ్వు చేసిన కష్టం ఎప్పటికైనా సొంతం.
చాలా బాగా పాడారు సార్. నా జీవితం గురించే పాడినట్టుంది. సార్ 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 ఆయన ఎవరు?
ఈ జిల్లాకి కలెక్టర్ ఆ సార్.
నేను వెతుకుతుంది ఆయన కోసమే సార్.
అవునా?
ఒకసారి మాట్లాడొచ్చా?
ఓకే
సార్.
నీ జాబ్ కన్ఫర్మ్ అయింది, వచ్చి జాబ్లో జాయిన్ అవ్వు.
కష్టపడి కలెక్టర్ అయ్యారు కాబట్టి నా కష్టాన్ని అర్థం చేసుకున్నారు. థ్యాంక్ యూ సార్.
రాదురా ఏ విజయం నీ కోసం నా కోసం, ఎటుపోదురా నువ్వు చేసిన కష్టం ఎప్పటికైనా సొంతం. కాలంతో పయనించే వాడికి కానిది ఏముంది, సాధనతోనే సాధ్యమవ్వునని సదాశయంతో సాగర ముందుకు. రాదురా ఏ విజయం నీ కోసం నా కోసం, ఎటుపోదురా నువ్వు చేసిన కష్టం ఎప్పటికైనా సొంతం.
a.m. leakage worry stealing your sleep. That's why. Stay secure nights. Try Mini XL and double.
రాదురా ఏ విజయం నీ కోసం నా కోసం, ఎటు పోదురా నువ్వు చేసిన కష్టం ఎప్పటికైనా సొంతం. రాదురా ఏ విజయం నీ కోసం నా కోసం, ఎటు పోదురా నువ్వు చేసిన కష్టం ఎప్పటికైనా సొంతం. కాలంతో పయనించే వాడికి కానిది ఏముంది సాధనం.
కాలం నీతో నడవదు, నిన్నడిగి ముందుకు సాగదు. సంకల్పం ఒకటే చాలదు, దానికి సమయమే కదరా ఆయుధము. విజయం నేరుగా చేరదు, శ్రమ పడితే దక్కగా మానదు. నీ లక్ష్యం చేరే మార్గంలో ప్రతి సెకను విలువని తెలుసుకో. ఉన్నోడివా లేనోడివా, ఏ కులం నీదని అడగదు. మంచోడివా చెడ్డోడివా, ఏ మతము నీది అని అడగదు. ప్రేమ చాలి చూపదు, ఏ దాక్షిణ్యాలే ఉండవు. ప్రేమ చాలి చూపదు, ఏ దాక్షిణ్యాలే ఉండవు. దానికి విలువను ఇస్తే గెలుస్తావు, అది మరిచితే అక్కడే ఆగుతావు. కాలం నీతో నడవదు, నిన్నడిగి ముందుకు సాగదు. సంకల్పం ఒకటే చాలదు, దానికి సమయమే కదరా ఆయుధము. మనకున్న టైం సరిపోదు తమ్మి, జర జల్ది మేలుకోరు. సమయాన్ని చులకన చూసినవంటే ఓటమితో నిలిచినట్టే. మనకున్న టైం సరిపోదు తమ్మి, జర జల్ది మేలుకోరు. సమయాన్ని చులకన చూసినవంటే ఓటమితో నిలిచినట్టే. క్రమ పద్ధతి లేని జీవనం, కాలం విలువను మరిచినం. సమయాభావం గొప్పది, అది లేదని చెప్పితే కుదరది. గెలిచిన వీరుడి మనసుని అడుగు, సమయం విలువేంటో. గడిచిన నీ గత కాలాన్ని అడుగు, కోల్పోయిందేంటో. అది తెలుసుకొని ముందుకు పోతే విజయం నీ బానిసరా. కాలం నీతో నడవదు, నిన్నడిగి ముందుకు సాగదు. సంకల్పం ఒకటే చాలదు, దానికి సమయమే కదరా ఆయుధము. ఒకసారి నువ్వు ప్రతిమాలి చూడు కోల్పోయిన కాలాన్ని, తిరిగొస్తదేమో నీ వైపు చూసి నీ సమయం కరుణించి. ఒకసారి నువ్వు ప్రతిమాలి చూడు కోల్పోయిన కాలాన్ని, తిరిగొస్తదేమో నీ వైపు చూసి నీ సమయం కరుణించి. నిన్నే నిన్నుగా మలిచేవులిరా సమయం అంటే తమ్ముడా. విలువలతోని బతికే బతుకును అందిస్తదిరా నిండుగా. క్రమశిక్షణను నేర్పిస్తదిరా సమయం మను నిత్యం. స్వేరో సైనికుడై సాగర కాలం నీనేస్తం. ఆ జెండా ఎత్తి నడవర తమ్ముడ ధైర్యం నీకను నిత్యం. కాలం నీతో నడవదు, నిన్నడిగి ముందుకు సాగదు. సంకల్పం ఒకటే చాలదు, దానికి సమయమే కదరా ఆయుధము. విజయం నేరుగా చేరదు, శ్రమ పడితే దక్కగా మానదు. నీ లక్ష్యం చేరే మార్గంలో ప్రతి సెకను విలువని తెలుసుకో. ఉన్నోడివా లేనోడివా, ఏ కులం నీదని అడగదు. మంచోడివా చెట్టోడివా, ఏ మతము నీది అని అడగదు. ప్రేమ చాలి చూపదు, ఏ దాక్షిణ్యాలే ఉండవు. ప్రేమ చాలి చూపదు, ఏ దాక్షిణ్యాలే ఉండవు. దానికి విలువను ఇస్తే గెలుస్తావు, అది మరిచితే అక్కడే ఆగుతావు. కాలం నీతో నడవదు, నిన్నడిగి ముందుకు సాగదు. సంకల్పం ఒకటే చాలదు, దానికి సమయమే కదరా ఆయుధము.
Thank you, friends. You watch now till now motivational video. Now again we are resumed to IND AS 109 Financial Instrument. Now, see. Now we are in reclassifying the financial assets. If an entity reclassify the financial asset, it shall apply the reclassification prospectively from reclassifying date. Understand? If reclassification of the financial asset, if an entity reclassify the financial asset, it shall apply reclassification prospectively from reclassification date. Reclassification accounting measured at fair value on reclassification date, charged to profit and loss account. Fair value on reclassification date, charged through other comprehensive income. Gain or loss on reclassification, if it is going through fair value through profit and loss account, charged to profit and loss account. If it is going through fair value going through other comprehensive income, charged to other comprehensive income. Effective interest rate, whereas fair value through profit and loss account not applicable, whereas fair value through other comprehensive income, no adjustment due to reclassification. It means use original EIR. Okay, friends, understood? Now we are going to next reclassification fair value through profit and loss account. It measured at fair value on reclassification date and through fair value other comprehensive income, fair value on reclassification date. Gain or loss to charge to profit and loss account the acquisition cost. Whereas fair value through profit and loss account and reclassification date. Gain or loss charged to profit and loss account, profit and loss account. Effective interest rate calculate EIR based on the fair value on reclassification date. Calculate EIR based on the fair value on reclassification date. Reclassification of the fair value through other comprehensive income to accounting, fair value through profit and loss account, measured at fair value on reclassification date, same, and gain or loss to charge to other comprehensive income, cumulative gain or loss in other comprehensive income, remove from the equity and adjust to the against the fair value on reclassification date. Due to such adjustment, fair value is measured at ACE on reclassification date as it has always been measured at the account AC. What is meant by AC? Keep telling AC. Amortized cost. Amortized cost. To amortized cost, no adjustment due to reclassification, it means original EIR. Fair value through profit and loss account, EIR not applicable. Topic 4. Recognition and measurement of financial liability. Classification of financial liability. Financial liability at fair value through profit or loss account. It is also known as financial liability held for trading which are incurred principally for the purpose of repurchase in the near term, make short term profit or derivatives. Financial liability can be designated to this category at inception. At entity may, at initial recognition, irrevocable, designated a financial liability as measured at fair value through profit and loss when permitted, or when doing so result in more relevant information because it eliminated the significant reduced measurement or recognition inconsistency, sometimes referred to as an accounting mismatch, that would otherwise arise from the measuring the asset or liability or recognizing the gain or loss and losses on the different basis. So financial liability at fair value through profit and loss account is also known as a financial liability held for such trading, which are incurred in the principal for the purpose of the repurchase in the near term, make short term profit or derivatives. Understand, friends? Any doubt? Yes? Any doubt? Please ask me. or call me. Financial liability. The financial liability at amortized cost, other liability, initial and subsequent recognition measured at financial liability. Initial and subsequent recognition and measurement of the financial liability. On initial recognition, amortized cost, fair value, whereas fair value through profit and loss account also fair value. On balance sheet date, amortized cost is amortized cost only, whereas charge to profit and loss account. Fair value transaction cost on initial recognition from the amortized cost deducted. Transaction cost on initial recognition should be deducted from amortized cost and charged to the fair value through profit and loss account. Understand, friends? Fair value gain or loss, whereas in case of amortized cost, is not applicable. Whereas fair value through profit and loss account, charge to profit and loss account. Interest income. For example, interest. In the case of amortized cost, profit and loss calculated by using effective interest rate, whereas fair value through profit and loss account is not applicable. Okay, friends. Now, reclassifying the financial liability. An entity shall not reclassify any financial liability. Only reclassify reclassification of financial liabilities. Previously, we studied over there reclassification of the financial asset, whereas financial liability, you will not reclassify, you will recognize and measurement of the financial liability and classification of the financial liability at the fair value through profit and loss account. Financial liability adjusted amortized as other liability. Understood, friends? Any doubt? Any doubt in this? No. Okay, we'll proceed. The recognition of the financial asset and financial liability. Derecognition of the financial asset. The financial asset will be derecognized if any one of the following conditions is satisfied. What are those? A contractual right to receive cash has been expired, or entity has transferred contractual right to receive cash flows from the financial asset and also transfer substantially all the risks and rewards of the ownership of such financial asset, or entity retain the contractual right to receive cash flow but assume contractual obligation to pay cash flows arising from such asset and also transfer substantially all the risks and rewards of the ownership of such asset. The entity has not retained control or financial asset. Examples of when an entity has transferred substantially all the risks and rewards of the ownership, or an unconditional sale of financial asset, a sale of the financial asset together with an option to repurchase the financial asset at its fair value at the time of the repurchase. At the fair value at the time of the repurchase. A sale of the financial asset together with an option to repurchase the financial asset at its fair value at the time of the repurchase. Okay, and a sale of the financial asset together with a put or call option that is deeply out of the money. A sale of the financial asset together with put or call option that is deeply out of the money. Okay, now examples: when an entity has retained substantially all the risks and rewards of the ownership are a sale and repurchase transaction where the repurchase price is fixed price or at the sale price plus a lender return. A sale of the financial asset together with a total return swap then transfer the market risk exposure back to the entity. A sale of the financial asset together with a total return swap that transfer the market risk exposure back to the entity. Okay, now a sale of the financial asset together with a deep into the money put or call option, a sale of short term receivable in which the entity guarantees to compensate the transferee for credit losses that are likely to occur. Most significant risk in the portfolio of short term receivables, it is usually a credit risk, the risk that the customer will default. Therefore, an arrangement that involve the transferee having a full resource to the transferor for credit losses will fail the risks and rewards test. An arrangement in which the transferee has no recourse to the transferor for credit losses will generally pass the risks and rewards of the test. Most significant risk in long-term receivables, interest rate risk and slow payment risk are fairly significant. In those cases, an arrangement in which the entity continue to pay interest to the transferee until the underlying debtor settles involve the transferor retaining the risk of the slow payment. Most significant risk in long-term receivables, interest rate and slow payment risk are fairly significant. In those cases, an arrangement in which entity continue to pay interest to the transferee until the underlying debtor settle involve the transferor retaining the risk of the slow payment. When the entity has retained control to the transferred asset, whether the entity has retained control of the transferred asset depends on the transferee liability to sell the assets. If the transferee has the practical ability to sell the asset in its entirely to an unrelated third party and is able to exercise that ability unilaterally without needing to impose additional restrictions on the transfer. Understand? Understand? Can I continue? We are talking here when the entity has a retained control over the transferred asset. Then what is it? Whether the entity has a retained control over the transferred asset depends on the transferee liability to sell the asset. If the transferee has the practical ability to sell the asset in the entity to an unrelated third party and is able to exercise that ability to unrelated and without needing to impose additional restriction on the transfer, the entity has not retained control. No. What is accounting treatment for deferred differential? No, no. What is the accounting treatment for derecognition of the fixed asset? The transfer that qualifying for derecognition, for complete derecognition, bank account debtor to financial asset. The bank account will be the consideration received, whereas the financial asset you need to compute at carrying amount. Note, any difference should be recognized in the statement of the profit and loss account, profit and loss or other comprehensive income. Any cumulative gain or loss that had been recognized directly in an equity account will be reclassified to profit and loss account, debt instrument, or transferred to retained earnings if equity instrument. Dear friends, I am talking about IND AS 109. That's called financial instruments. There I am talking about accounting treatment in case of derecognition of the financial asset. There I am talking about some note points. What those note points? Any difference should be recognized in the statement of the profit and loss account or other comprehensive income. Any cumulative gain or loss had been recognized directly in an equity account will be reclassified to the profit and loss account if debt instrument or transferred to the retained earnings in case of it is equity instrument. Whereas the debt instrument I am reclassifying to profit and loss account. Whereas retained earning I am transferring to equity instrument. Am I right? Now, for what about the for partial derecognition? We are talking about partial derecognition. Whereas the matter regarding to the partial derecognition, when a portion of the contractual right to receive cash flows is transferred, then you need to follow these steps. What are those steps? Step 1, calculate the fair value of transferred and retained portion by applying expected yield rate of transferee if not given in the question. Understood, friends, or not understood? See, what I'm telling you, the step number 1 is calculate the fair value of transferred and retained portion by applying expected yield rate of transferring if not given the question. Now, just 1 minute. Right. Okay. Now, for partial recognition, when a portion of the financial a contractual right to receive cash flow is transferred. Now, the step one is calculate the fair value of transferred and retained portion by applying expected yield rate of transferring. If not given in the question, fair value of transferred portion, fair value of retained portion, total fair value of the financial asset, fair value of transferred portion, fair value of retained portion. Together will be what? The total fair value of the financial asset. Now, we are moving to step 2. In the step 2, what we are talking here, allocate the carrying amount of the financial asset, allocate the carrying amount of the financial asset in the ratio of their fair value, transferred portion and retained earnings portion, total together total fair value of the financial asset position, accounting treatment. For transferred position portion, bank account, the consideration received account debtor to the financial asset, carrying amount of the portion transferred. Okay. Whereas we will look into that for retained portion. Principal strip account debtor, interest account strip account debtor, servicing asset account debtor, allocated at carrying amount to the financial asset. The carrying amount of the portion is called retained. Understood the point? For transferred portion, bank account debtor to financial asset. So consideration received account debtor to the portion of the transfer. Okay. Now, if I speak step 2, for retained portion, principal strip account debtor, interest strip account debtor, services asset account debtor, all will be allocated at carrying amount, and to financial asset, carrying of the portion retained. Carrying of the portion retained. Note, any difference should be recognized in the statement of the profit and loss or other comprehensive income. A cumulative gain or loss that had been recognized in the equity account is allocated between the part of that continues to be recognized and the part of that is derecognized based on the relative fair value of these parts. Any cumulative gain or loss allocated to the transferred portion will be reclassified to the profit and loss account if debt instrument, and transferred to the retained earnings if it is equity instrument. Transfer asset that do not qualify for derecognition. If transfer does not result in derecognition because the entity has retained substantially all the risks and rewards of the ownership of the transferred asset. For example, in a situation when the transfer guarantees the transferees against any default losses, the entity shall continue to recognize the transferred asset in its entirely, recognize the financial liability for the consideration received. The liability is subsequently measured at amortized cost using the effective interest method, and in subsequent period recognizes any income on the transferred asset and any expense incurred on the financial liability. Continuing involvement of entity in transferred asset. If an entity neither transfer nor retain risks and rewards of the assets and retained the control of transferred assets, then the entity continue to recognize the transferred asset to the extent of its continuing involvement, which is equal to lower of the carrying amount of the transferred asset, the guarantee amount, lower of carrying amount of the transferred asset, or the amount guaranteed, lower of. Okay. Now, if an entity neither transfer nor retain the risks and rewards of the asset in relation to the control of the transferred asset, then the entity continue to recognize the transferred asset, the extent of the continuing involvement, which is equal to the lower of asset transferred or guarantee amount, which is lower. Now, the entity also recognize the associated liability, which is initially measured at the guarantee amount plus the fair value of the guarantee consideration received for guarantee. Note, the guarantee liability of the fair value of guarantee shall be amortized to the profit and loss account over the guarantee period. The journal entry passed by the entity on the date of recognition is as below. Cash account debtor, continuing involvement asset account debtor, to receivable, to amortized liability. What will happen? The guarantee amount plus the fair value of the guarantee consideration received for guarantee. No. The guarantee liability of the fair value of the guarantee shall be amortized to the profit and loss account over the guarantee period. The journal entry passed by the entity on the date of derecognition is as below. Cash account debtor, continuing involvement asset account debtor, to receivable, to associated liability. Any difference should be recognized in the statement of the profit and loss account. Friends, till now we studied derecognition of the financial asset. Understand? Now I am going to lunch. Post lunch, we are going to discuss about derecognition of the financial liability. Okay, friends. Thank you. Thank you very much. Bye bye. We'll meet you next class.